Okay, I apologize. I was just in the middle of this recording and accidentally deleted it, so I really kind of forgot everything I just said. Anyways, I'm gonna try and be really brief. Dang, I hate that happened. 60-minute chart. Trying to form a wedge. No, we're really testing the November high. Trying to form a wedge. 15-minute chart. Let me just go over here real quick. Wedge top, 3 pushes up. Target was down here. Bulls tried to break twice above yesterday's high, could not do it and turned down. So odds favored today with this strong of a rally, 75% chance, 2 legs sideways to down. Sideways to down. Doesn't have to, this was low probability. So anyways, come back to today. Bar 1, bad stop entry, buyers below, sellers above. Bad stop entry, probably buyers below. Here, the first decent stop entry of the day. It's probably going to have some sort of decent follow through. It's arguably the first always in stop entry. Reason being, it's not too big. It's a bear bar. So bears will short, stop above, and it's probably not going to go always in long until we go above it. Trading range price action, you can call it whatever you want. You can call it a triangle, you can call it a final flat. It really doesn't matter. What matters is most breakouts fail, and until there is a breakout, there is no breakout. So as good as the signal bar is, it could still fail. Here was the first reversal attempt of this. Here was the second. You called it a high T, you called it a double bottom. Aggressive, flexible, always in traders. Always flexible, always in bear. Excuse me. Flexible, always in bears. Will exit, and then they short below here, here, here. But really, the stop for the bears is up here, and we got a breakout, minimum follow through. It's not a bull body, so bears will hold short, and we tested down here. In order 3 pushes, we broke above. However, the first reversal should fail. Second off, no follow through. That's the key hint. And also, here's the August bear trend high, and the odds were we were going to touch it. We hadn't touched it, and since here, and it's been quite a few bars. Every day this week we have just been hammering it. At least touching it every day. So we're probably gonna touch it then. Anyways, also. We've been away from moving average for quite some time compared to other days, so we were probably going to touch it. But you don't need higher time frames to do all this. Anyways, if your question was if this was a major trend reversal, it's probably minor. Second off, when you hammer down quickly like that, it's kind of a hint. Here, why do you think this bar was so big? Well, 60-minute moving average and the August bear trend high, which is this line right up here. Traders bought back and bought for scalps. They also knew reasonable by the close bar, they'll scale and lower and exit. Here, called a low too short, double top with here, test at the top of the channel, test of this stop entry. Arguably, it is a measuring gap right here. So another reason when we tested that measuring gap here, tested it here, and we tested the target there. We're going to delete that. And we drifted sideways. The bulls never did enough. Notice this. You call it a breakout bar, bad follow through breakout. Arguably, the bulls need 1 more bar. I think they needed at least 2. They didn't get it, and so you have a high, lower high, lower high. 3 or 4 bars down, probably sellers above, and we started drifting down. So at this moment, a couple things here. To here, you got to think, okay, here's the channel. Maybe something like that, maybe something like that. At first you could draw the channel like that. And this is kind of a hint. So first push, second push, one of these pushes. If you draw a parallel, which is this, and snap it to in between these two pushes, put it up here, that's ideally how the channel should behave. And if it turns down before it reaches the trend line, it's getting stronger. Bears are becoming more aggressive. So now maybe best to use this and possibly make a parallel. And I know you're probably thinking, what are you doing? Point being, it's kind of a little way to have a visual aid of the market getting stronger. But I mean, you just need to know it's in a channel. Broke below the channel. So at this moment, what's the most likely thing? Are we going to break below this channel and race to the bottom, or is this an exhaustion gap and we're going to find buyers? Probably test this high, maybe close the gap up here. So in other words, is this a exhaustion gap or measuring gap? Well, at this moment, I think it's exhaustion. We're breaking below a channel, 75% chance. 75% chance the breakout below the channel will fail. However, it may fail in 10 bars. Doesn't have to fail immediately. So, I was actually not. Well, I was watching at this moment, and I debated. Arguably, since I'm trading all in, I should have shorted here. But I was looking to buy. I was expecting the test of the bottom of the channel and some sort of, let's look for a second entry buy, which I'm fine with. One of the most important things I've realized and really working on right now is, if you're truly unsure and you don't want to do something, then don't do it. So what I mean by that is, whether you are uncomfortable with it, and when I say being uncomfortable with it, I simply mean you can be, I was uncomfortable shorting here because of the risk of exhaustion in a reversal. I wasn't scared to short, I just thought the odds were it was going to fail, so I didn't short. And I think, and that's okay. I'm not talking about being uncomfortable emotionally, I'm talking about knowing that there's a possibility of exhaustion. So, with that said, if, and there's one important thing with this, it's climax. Not really, well, a little different. Here it's a breakout of a trading range, so we may get a measure to move down. Climax, another climax bar. Anyways, first target for the bulls is to test up here. The most important question is the next bar, minimum follow through. So, what you have to remember is, there's an old saying, the markets can stay irrational longer than you can stay solvent. And that simply means exactly what it sounds like. The market can continue to do the same thing longer than you can sustain your account doing the opposite. So the worst thing you can do is buy. If you buy, traders will buy, they'll buy this low, they'll scale in lower, and they'll try and get out, which maybe they did. So look right here, you buy this low, 86.75, you get out. Look at this. 86.75 is your entry. Your target is 87.75. You need one more tick to get out, and it went to 88 even. That tells me a lot of traders bought the low and scalped out. Some probably scaled in, scalped out. Anyways, until there's a decent stop entry, always in bears are still short. All the way down. All the way down. Boom. Bears will get out above here. Didn't trigger. Bears are definitely getting out above here. This is also an 18 bar micro channel, so very unsustainable. And back to what I said, there's never, ask Al, he says it all the time in his trading room, traders make enough money to make a very good living. I'm sure everybody in this room makes plenty of money on good trades. The problem is, is that we all make too many bad trades. And I mean just in general as traders. You know, the difference between someone who's profitable and not profitable is how many bad trades they take. And I know it sounds simple, but it's very true. So, anyways, possible exhaustion, but this time we got the measure moved down. And we even possibly got it. And then we got it based off this even. So, here you go. And here, the only thing I'm doing is buying. I cannot sell an 18 bar micro channel. First reversal should fail. Trend line break. Now, here's the target. Here or here. We hit it here, reversed up, broke below it here. So, kind of. I don't know if y'all are familiar. The middle of the road. I don't know if y'all have ever heard of that analogy, but it has to do with trading. And an example would be if you buy above this, I would not get out one tick below this bar. And if you do, I'd be very quick to enter on a reversal. So if you buy above here, you either get out below this bar or, I apologize, get out below this bar, get stopped out below here and be quick to buy again, or you put a stop somewhere down here because the odds are there's buyers below here. So in other words, you don't buy here and get out here. Either get out here, you get out quicker. You don't buy here and get out all the way down here. It's the middle of the road. You either take the first exit, you either exit quickly or exit or just trust the stop. Hope that makes sense. Then here, trend line break, lower low, major trend reversal. You can see this bar is very important. It went one tick below this close. A lot of bears sold this close, scaled in, scalped out, or got out of break even, and we drifted up. Current price action, I haven't looked all day, so I kind of just want to look. Well, looky here. We had a arguably climax, 2 legs up likely, tested down, seller sold this high theoretically, scaled in, got out. So overall, biggest thing I would say with today, if you're uncertain, just stay out. Second is that whenever you see something that's climactic, you don't have to sell. However, you don't have to sell. However, the one thing you should not do is anticipate the market reversing here. So you don't say, ooh, sell climax, I'm going to buy the market and I'm going to use a 6-point stop and just hold through all of this. Because invariably you'll buy here, you'll hold, can't take this, and just exit at the bottom. The traders who are long here are, they're using a measured move like down. They're using a very big measured move. Maybe something like this, and they'll buy all the way down, and their target's somewhere like up here. So I guess what I'm saying is, if you want, it's one thing to stay out of the market and wait for a stop entry. I did that today, and I'm gonna put it this way: if you're looking to buy, wait for a stop entry, because you have to understand when you buy below this bar, it's a scalp. Everything's a scalp until the bears have a reason to get out and the bulls have a good stop entry. So, and that's kind of why always ends important. It's important to understand always in bear short here. Some will get out, some bulls will buy. However, it's always in short. So the bears still are short here. So it's important to understand that the market never really did enough. It's important to, if you can understand where swing bulls, where swing bulls will exit and where swing bears will exit, that gives you an advantage in knowing where to look to buy. For example, this is kind of okay, decent example. Always when bears are short, wedge top, double top, trading range day, we're at the top of the lower high. First push, second push, 3 legs down to the third push. Second entry buy, failed breakout of this kind of swing, high or low, if you will. Traders will probably exit, but still always in short. We're probably going to go sideways. Moving averages are relatively flat. So I guess kind of where I'm going with that is maybe this is a good example. Are we always in long? Yeah, we are, arguably, but not strongly, which is why bears will be quick to get out here. You may be thinking, yeah, it's a tight channel up. Well, it is. However, here's a gap down, and we only broke above yesterday's high by a few ticks. So the bulls probably need a better double bottom. And the bears know that, and they're going to try to get a third push down. Here, you may be thinking, oh, this is the second bull bar, and these are a lot of bear bars. Well, why get out there? Well, I pointed this out, I think, yesterday, but first push, second push, third. It's a wedged bottom. Target is the top of the wedge. And if it's a trading range, this was the first failed breakout of the low today. Here's the second. So we have a sell climax, breakout, no follow through, and the test is the top of here, which you can see a lot of traders took profits up here. That's likely profit taking. But if you don't know that, let's say you're short 3 bull bars, you have to be concerned of, well, a couple things. Real quick. This reminds me a lot of yesterday. So picture this: we had a opening trend from the first bar, sell off, and then a strong trend to the upside. Okay, trend from the open, sell off, and a drift up. What's the difference between this up, and this down? And here we go. The 24th, where we went up and down sharply. Well, there's one difference. Buy climax, sell climax. Whenever that happens, the odds are sideways, and the bulls and the bears are going to fight between a couple things. They're going to fight over the test. And, what I mean by the test is the test up here and the test down here. The test fighting over the test up here and the test down here, as I discussed yesterday. Remember, there's no such thing as a V top or a V bottom, and that is probably, in my opinion, one of the most important things to understand. This is not a V bottom. And you can argue it is a V bottom, and sure, cut all this out, it's a V bottom. But you have to look to the left. Sell off, found buyers. Sell off, we closed the gap. Sell off, probably going to close this gap. So I guess what I'm saying is you have to understand possible final flag, or you can say final flag here. It doesn't really matter. By the way, I read Now's book. I never knew this, but it's kind of interesting. I don't know if I'm really doing this right. Al claims, and I do kind of believe it, he claims if you, well, I'm having trouble with it. Find the last final flag, draw a line, and it'll direct kind of the channel of the move up. That's kind of irrelevant right now. Anyway, there's always a test up and a test down here, what was more likely? Probably the test up. These were reasonable bars to buy, and this sell-off could easily be a pullback. And if it's a pullback, pullbacks don't have to be tested. In other words, this pullback does not have to be tested. This close will probably get tested. So you can argue we had a spike, pullback, channel. Doesn't, just because we went below the spike does not mean that this is not a pullback. So you have to question, we've been going down for 2 days dramatically, probably have some sort of I don't know, it really doesn't matter. Kind of parabolic to the downside. So, point being, the odds are we were going to test this. We had a spike, trend line break. You need to test at a higher low, lower low. So, it's amazing how similar these are. We went up, tested down, but look at the pullback. This was the initial test of up here. Very strong. This gave the bulls confidence to know we're probably going to go higher. Maybe up to here, maybe the top of the climax. Most likely for sure up to here. This day, we went up, went down, went sideways. Strong enough to tell the bulls we're probably going to test up here. This lower high major trend reversal is probably going to fail. This lower high, you can call it a major trend reversal, which is this day, this is probably going to fail. So, anyway, it's just interesting stuff to notice. If we would have went down as we did, 1 bar, 2 bars, bear bar, sideways for a little bit, maybe barely drifted to the moving average, especially if we didn't go above this low and turned down, we could have gotten a very strong bear trend. 3 outcomes: trend line break, major trend reversal. 3 outcomes. We're either going to test this close, test the lower high and turn down, or break strongly above. Well, here's this close, here's this close. Bull bar, 4 bull bars. We broke above. So, here, sideways for a couple hours, we tested up and just channel. So, there's always similarities to a chart, and you have to remember that here was the sell climax, best looking bear bar, below the low of the day, bad follow through, bull bar, it's probably going to fail. Now think about it this way. The bears needed a bear bar, another bear bar. If they would have gotten a bear bar as big as this, third bear bar, whole different game. Different story altogether. But because they did not get the good follow through, it's forcing traders to buy a low one at support, the low of the day, the low, the low of the day at a sell climax. So, hope that makes sense. Same thing here. Low one at support, bad follow through, way too big of a bear bar, too big of a tail, bunch of problems. So where do we go from here? Well, couple things. Arguably a trend line break. Doesn't matter how you want to draw it. Really, I think sideways. We had a wedge top, tested low. We may test down here. We may test down here. We may test up. Strong enough breakout, probably a second leg down likely. However, where's the follow through below this breakout? It's just a lot of trading range price action. So, with that said, hope everyone has a great day tomorrow and a great trading